Today's topic is about the financial war. Since February 24th, 2022, Russia invaded Ukraine. Europeans and American countries have put forward a number of sanctions, including suspension of trade, removal of Russia from the SWIFT system, and most important of all is the freezing of Russia's foreign exchange reserves. It caused a plummet of the Russian stock market on the first day and a sharp drop of the ruble exchange rate. And the Central Bank of Russia has increased its interest rate substantially. It is likely that the sanctions will lead to a recession and a surge of inflation in Russia if the sanctions continue. Today's focus is more on the depreciation of the ruble because it has already triggered a bank run in Russia and made the financial system unstable. It's a very important experiment of the fiat money system after the implementation of the fiat money system 50 years ago. So let's take a look about the stock market plummet first. So here shows the diagram of the MOEX index of Russia's stock market and the plummet from 3,600 points down to almost 2,000 points. And then the stock market has been suspended. The invasion has caused the stock price to fall more than 40%. However, I think a stock market index does not necessarily reflect the economic impact of the sanctions because for totalitarian countries, they have plenty of ways to prevent stock market from falling, just like what they have done now. They can suspend the market, restrict sale of stocks, injecting state funds to buy stock in the market, etc. Furthermore, the stock market has risen a lot in the past few years. So even after a 40% plummet, the stock price is still higher than the level of 2018. So I think the decline of stock prices usually indicate a sense of panic, which does not have long-term impact on the economy. On the other hand, the ruble plunges is more important, as now most of the Russia's foreign exchange reserves have been frozen by the sanction. So the ruble's currency loses its value derived from its foreign exchange support. It becomes a crisis of currency confidence in the country. So that explains why there is a plummet of the currency exchange rate. So let's take a look about the diagram here. It is US to ruble exchange rate. It caused a surge from about 75 to 104 on the first day of the war. And currently it's about 110. So in other words, it has an increase of more than 50% for the US to ruble exchange rate. And it broke the record of the past 25 years. So it's much more difficult to stop currency from depreciating because now all currencies in the world are fiat money. So their values are basically derived from trust and confidence. Once the confidence of the economy in the future of the country is lost, then the currency itself will have no value unless it has valuable commodity support. So that's the reason why it's called fiat money, as fiat money is defined as currency that are made legal tender by a government decree or fiat. So then the Central Bank of Russia tried to stop the ruble's depreciations by raising interest rates because higher interest rate can attract inflows of funds, which can help to stop currency devaluation. And in fact, the Russian central bank has increased its interest rate from 9.5% to 20% after the outbreak of the war, which broke the 20-year record. But even after increasing the interest rate to 20%, ruble is still falling against the dollar. So probably it implies that 20% and the interest rate is still not high enough to hedge against the devaluation risk. In addition, in order to provide enough foreign exchange, the Central Bank of Russia has also teamed up with the Ministry of Finance of the country to impose mandatory foreign exchange sales on companies and requiring Russia export companies to sell 80% of their foreign exchange earnings. All these actions indicated that Russia has a foreign exchange shortage. So here shows you the diagram that interest rate has been increased sharply from 9.5% to 20%. So the reason why I call it a fiat money experiment is because last year was the 50th anniversary of the replacement of quasi-gold standard by the fiat money system. You can refer to my previous articles with the link here, reviewing historical events in the past 50 years of these monetary systems. So the article put forward the weaknesses of and the market's concern about fiat money system, while now Russia has been experiencing the problems of the system. For example, central bank usually would increase the supply of the currency to save banks from a bank run. But currently, since most of the foreign exchange reserve of Russia has been frozen, increasing money supply is equivalent to devaluing the ruble and doing harm to the exchange rate. So this becomes a textbook type experiment of the monetary theory, providing an empirical test on the fiat money system. Since 1971, the world has adopted such a fiat money system. Countries have been looking for ways to consolidate investors' confidence in their currencies. So that's the reason why many countries have piled up foreign currencies as their foreign exchange reserve. For example, Hong Kong adopted the link exchange rate system, which pegged the currency to US dollar at a fixed exchange rate. Basically, it relies on a sufficiently large amount of foreign exchange reserve to support the currency value. Here, the diagram shows you the top 6 countries with the highest amount of foreign exchange reserve. They are China, Japan, Switzerland, United States of America, India, and Russian Federation. Russia ranked the 6th with the total reserve amount of 614 billion US dollar. However, since most of these foreign exchange reserves are invested overseas, and that's the reason why the sanctions of the United States, Canada, and the European allies on February 26th can freeze Russia's foreign exchange reserve. From this incident, it shows that fiat money supported by foreign exchange reserve may not be safe. In fact, I think Russia has already diversified its foreign exchange reserve in the past decade. Russia foreign exchange reserve currently are composed of 16% US dollar, 32% euro, 22% gold, and 13% renminbi. In other words, even if the sanctions by Europe and the United States can be effective, they can only freeze at most 48% of Russia's foreign exchange reserve. In other words, Russia can still have 52% of the reserve to support the war. Furthermore, there are reports saying that Russia's foreign exchange reserve also include cryptocurrencies. Cryptocurrencies are well known to be currencies that are decentralized. That means they are not controlled by central banks, so they cannot be included in the sanctions. And also, right, there are reports that many issuers of cryptocurrencies have already rejected Ukraine's request to freeze Russians' accounts. This makes cryptocurrencies attractive to dictators as it can be muted from sanctions. However, as many countries are regulating or even prohibiting the mining and using of currencies in their country, so it can also be risky politically. But then gold reserves seems to be completely immuted from any sanctions so far, which probably can explain why Russia has increased its gold reserve over the past decade, increasing the proportion of gold in the reserve to 22%. And here shows you that top countries with the largest quantity of gold reserve. They include USA, Germany, Italy, France, Russia, China, and Switzerland. Russia, again, they hold 2,298.53 tons of gold as reserve. In the past few years, the price of gold has increased a lot. With the outbreak of the war, recently the price of gold further gains upward momentum. So countries with a lot of gold reserve can be benefited financially by launching a war. It may further attract war-aggressive countries to buy more gold, even urge the switch from the fiat money system back to the gold standard monetary system. We learned from the recent event is that money is valuable, currency is not. Currency is only a tool of exchange. The commodity standard of money system established the value of the currency by some valuable commodities, such as gold, which can be decentralized and immuted from sanctions. On the contrary, the fiat money system currently we adopt derive its value of the currency from the confidence in the government and the future economy. So it works like buying non-interest-bearing government bonds. The confidence can be strengthened by saving sufficient foreign exchange reserve, but it can be sanctioned if it is invested overseas. Besides, it has to be noted that Russia has a large amount of natural resources, especially natural gas, which probably can provide confidence and value to its currency. Whether the financial sanctions can effectively stop the Russia's invasion of Ukraine remains to be seen. May God bless Ukrainians.